There we go.
Do you need your body wash to pack a punch like no other? Me and your favorite body wash, Dr. Teal's. Made with magnesia.
Go live. Live. There we go. And that and run normal. Good. And good evening. All right. There we go. And there you go. Right. Come on. There we go. Well, what do we have going on over here? Good evening. And how are all y'all doing? All y'all. Ha ha. Just getting ball started. All right, let's get rid of this. Let's start streaming. Yeah. You sure you want to start stream? Yeah. Stop recording. Blah, blah, blah. Yes. And I'm going to put you down here. That's going. Lovely. How you guys all doing? Give me a second while this baby is loading. Loading. I got by the hour. Uh-oh. What the hell's going on there? There we go. All righty. So let's see who's in the house today. Who do we got right at the beginning? Leah, good evening. Lemonade, how you doing? Joe, Junior, Rob. Food music, what's going on? Cajun scene. Chucky, what's happening? Flash, Happy New Year, all that kind of nice, neat, fun stuff. So we're live. We got 6, 7 cameras. All right, cool. All right. Jim, how you doing? Well, wow. Who do we have here? Rick McPhee, Flash, C3S, okay. Odom, how you doing? Gene, Ramiro, how you doing? Odom, Paul, Flash, Dismal, Pat, Lee, Lloyd, Odom, how you doing? Hey, Up Down Trader, how's it going? All right. K-Van, I see you sneaking in over there. Joey, I see you. Matt Parker. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Now, I always found it rather interesting, depending on where you come from and where you plan on going, will kind of decide what you plan on doing with your investments. Okay, that's what we're doing here. We are investing. I'm actually showing you what I do. Okay, back in 2008, my 9-year-old daughter says to me, Daddy, what are you doing? Can you teach me? So my 9-year-old daughter wanted to learn how to trade stocks, and that's how this whole journey started. What are we looking at here? There we go. So the whole journey started in 2008. She said, Daddy, what are you doing? Okay, so in order to teach a 9-year-old how to trade stocks, it had to be simple, safe, predictable, consistent, and no way for her to lose. I mean, isn't that almost like the perfect investment strategy? Simple, safe, predictable, consistent, no way to lose. Well, that's what I created for my 9-year-old daughter. Now, I had to think about it for a while. I've been trading for a few years when she asked me this. So, give me a second. Talking so much, got to lubricate the vocal cords. So, that being said, I came up with 5 simple rules and a trading strategy specifically for her. Bought some SMCI options for next month. RL, okay. I don't know why you would do that, but all right. The only reason I say that, RL, 80% of all options expire worthless. And you do realize that the options that you have bought, okay, let's say hypothetically you bought the $100 option and you paid $2 for it. Well, the stock's got to hit 102 just for you to break even. Then in order for you to make money on it, well, 103 would be a 50% return. 104, 105, then you start doubling your money. Fine, okay? But let me get back to the rules in a little bit. Cindy, how you doing? So to get back to the rules, simple, safe, predictable, consistent, no way to lose, 5 rules. You ready? They're pretty simple. Think about it. Simple, created for a 9-year-old. Number 1, never buy anything that's not on the list. Yeah, it's going to go up next week. Yep. All right, hope it does for you, brother. Number one, never buy something you don't want to own. That means if you buy something, don't ever question if it goes up or down. Just be glad that you own something that can give you a cash flow on a weekly basis. Now, I know we all invest for different reasons, but my reasons is pretty simple. Uh-oh, who do we got there? All right, Reed, how you doing? And Marissa, how are you? Bro, only 3 people are watching. Yeah, because you're on a channel that just new and no. Yeah, right. You might as well shut off your stream. You do realize you're on stream number 9, okay? You're the 9th one. There's no advertising whatsoever. So you're just a random stranger that shows up for some strange reason. It is what it is. It's not heavily marketed. Anyway, it's an afterthought, so to speak. All right, so as I was saying, rule 1, never buy something you don't want to own. Rule 2, never sell at a loss. Rule 3, make sure the company is consistently profitable. That's just the rule for my 9-year-old daughter. I mean, think about it. As adults, don't we want the same thing? Don't we want to put our money into a company that's consistently profitable and not actually have a possibility of losing? I mean, that just makes sense to me. But I look at some of the stuff you guys want me to look at, and I'm thinking, what are you guys thinking of? Bitcoin. Brother, it's not a dividend stock. The name of the show is Dividend Stock Talk. Bitcoin's not a dividend, doesn't have dividends, and it's not a stock. Rule 4, weekly options only. Okay, and rule 5, make sure all the numbers work. We are going to get to each and every one of those rules so you see how it all ties together. And if you are smarter than a 9-year-old, you'll get it. It took my daughter 15 minutes to understand the whole concept. It's a pretty easy concept. Make sure it's a good company. Make sure that it's worth your time and your money. SCHD, hell no. Okay, I'm going to show you the numbers for SCHD, and then you let me know if you think that's good. For me, no, it doesn't work for me. It doesn't give me what I'm looking for. Simple, safe, predictable, consistent, 1% per week. Sorry, SCHD doesn't give that to me. But I'll show you. As a matter of fact, let's do that one right now. Beverly. Renos, these returns are inclusive of commissions, etc. Yes, ever go up, up, up. Okay, RITM is the largest dividend play. Okay, we'll take a look at that one also, but let's start off with the first one. Who came up first? First, let's take a look at SCHD, and I'll explain to you why I don't like it. First, we're going to go over, oh, wait a minute, it's going to take a bit, because we have to go to Yahoo Finance. Here we go. Now, I like Yahoo Finance. I always tell everyone, if you go to invest in stocks, make sure you use a financial website. I like Yahoo Finance. I've been using it for so long, I know where everything is. And that, to me, is kind of important. What I like is that they don't mess things up and move things around or change it. So I remember 10 years ago, Yahoo Finance was one way. Then they changed it. I had some really cool software that worked off of the data from the old Yahoo Finance. But as soon as they changed the Yahoo Finance, all that software I had doesn't exist anymore. It doesn't work anymore. SMCI options. Oh my God, dude! He definitely knew. Okay, hold on. Don't be stingy on me now. Come on. All right, it's gonna be a little fickle. All right, so let's take a look at, I don't want to do SCHD because I don't think it is, all right, hold on, SCHD. Okay. So, SCHD, you say. Well, let's take a gander at it. Here's the top, here's the bottom, here's where it was, here's where it is. Okay, up, down, up, down, up, down. It's coming down at the moment, so it's not going to be a good play for me anyway for at least a couple of weeks. I'm not going to buy it anyway because it's not consistently profitable. But I'm looking at it for you. Okay, here's your 30-day top, 30-day bottom, shoots up, pulls back, back up, back down. Coming down at the moment, so I'd wait for it to find a bottom before I jumped in. But then again, I don't like SCHD. Let's see if Yahoo Finance is up and ready. SCHD. All right, let's give it a minute or two while it loads, and we'll find out the information for SCHD. Now, even though it's in a down market at the moment, it's actually coming down, right? Let's see what the performance looks like. Now, when I say performance, I'm investing for weekly cash flow. Now, SCHD may work in your plans, your long-term plans, but as a cash flow, weekly cash flow candidate, no. Okay, so here we are. Schwab Dividend Equity ETF, SCHD. It's 27.43 at the moment. What I want to see are the historical numbers. Okay, I got two choices. One, I can go in and look at all the quarterly reports and all the annual reports and see what the profits are, see where all the money's going. But you want to know what? I'm a lazy trader. Seriously, I am. Found a shortcut. Now the shortcut works for me. Foo-foo, I see you over there. I want to take the shortcut. Now I got this shortcut long time ago. Okay, and say I want to look at the dividends only. Now the reason why I only want to look at the dividends, because remember what I said, rule number 3, make sure the company is consistently profitable. So I got two choices: read 20 years of quarterly reports and annual reports, or go directly to the dividends. Do you know why? Because the dividends are a portion of the company's profits already in their little mathematical equation. This profit goes here, this goes here, this goes here. This goes to the investors. So a small portion of the profits every single year come back to us, the buyers and the sellers. So if I'm buying and selling a company, this one, I'm entitled to a share of the profits. And if those profits increase every single year, guess what? That means they're making more money year after year after year. But if those dividends go up and then down, when they're coming down, that means the profits are going down also, because the math never changes. If the company makes 100 million this year, okay, I'm going to get X amount. But if they make 80 million next year, well, I'm going to get less. It's actually that simple. Okay, so if I go directly to the dividends and the dividends increase every single year, year after year after year, I don't have to look at 20 years of quarterly reports. And I don't have to look at the annual report. I don't have to do a deep dive and all that crap. Is the company consistently profitable? I got two criteria and only two. That's it. That's how I do my trading. Two criteria. Alex, how you doing? Kilroy. Hey, can we check Labu? They pay a dividend and they have weeklies. I don't know what the consistency of dividends. Okay, Kilroy, sit tight. I forget where I was. Squirrel. I get sidetracked easily. It is what it is. So I want to go look directly at 20 years worth of dividends and see, do they consistently go up year after year after year? Because when I say consistency of profitability, that's one criteria for me. And weekly options, number 2. That's it. You may think there's a big, huge mathematical equation or some kind of secret. No, there isn't. I want 2 things and only 2. Is the company consistently profitable? 2 decades. I want 2 decades of profits. So don't give me that crap. 2 decades is a lot because the stock market's been around for over 400 years. Consolidated Edison has been paying dividends for over 200 years. Coca-Cola, over 140 years old. Okay, Bank of America, over 100 years old. There's a whole bunch of companies, a whole list of them that are over 100 years old and consistently still sharing their profits and still increasing their profits year over year over year. That's where I want to put my money. I'm 61, I'm going to be 62 in a couple of weeks. I don't have the luxury of being wrong. And however much money you think I have, no, I don't. I have enough to live comfortably. And I hope you guys reach that same, call it success if you want. But it's perfectly fine for me at this moment in my life. So I'm sharing with you guys the beginning of a new era in my life and take you guys along for the journey if you so desire to come along. That being said, let's take a look at the dividends for SCHD and you'll see exactly what I mean. Okay, I want to look at all the dividends. Okay, maximum amount. Show it to me, please. Here we go. Come all the way down at 2005, 2024, 18, 17, 16, 15, 13. Whoa, 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 whoa. 11? That's not 20 years. I said 2 decades. Because that's number one red flag for SCHD. That's number one. I want 2 decades, 20 years. Okay, this one, not so much. 14 years. So don't get me wrong, 14 years is good. But are they consistently profitable? Now I'm going to show you SCHD, which is not consistently profitable. And then I'm going to show you a company that is consistently profitable year after year after year. Okay, so you got to decide, what is it you want out of your investing? Do you want cash flow? Do you want stock accumulation? Do you want capital growth? Okay, so if you're looking for capital growth, or if you're looking for a stock to go from here and shoot to the moon, you're definitely in the wrong place. That's not what I do here. I'm looking for safety, predictability, and consistency. Okay, that's what I'm looking for. What other platforms are you streaming on once the backdrop in mirror image? Oh, that's because on YouTube. It's a YouTube issue where you cannot change the image. And trust me, I've been doing this for years. You go to YouTube, you see I've got over 1,400. 1,400, that's 1,400 videos on YouTube. It was a problem 14 years ago, and it's a problem now. So if you can figure out a way to fix it, let me know. Yeah, where else are you streaming? TikTok. I got 3 YouTube channels, 2 TikTok channels, Rumble, LinkedIn. Yeah, it'd take a while. LinkedIn, X, Twitch, and a couple others. I forget. Anyway, besides the point. Let's keep the ball rolling, all right? So, that being said, let's take out the profits on SCHD and see, do they consistently increase? I already know the answer, but I'm going to entertain you anyway because you want to know. The very first dividend, December 19th, 2011. Not quite 20 years, but okay. The first dividend was 4 cents. 4.0. So that's 4.06. Okay, so not a whole heck of a lot. Okay, the next one, 4.6. Then it jumps up to 6.8, 6.9, 8.6, 6. Is that going backwards? No. It was doing good. Look. 4, 4.5, 6.8, 6.9, 8.6, 6.6. That's backwards. So no, it's not consistently profitable, but hold on. It gets worse. It does. All right, so let's keep on going. All right, 6.6, that's down. Okay, 7.5, 7.7, 8.3, 8.2. Not huge down, but still less. I don't care if it's a penny less or $1 less or $20 less. Less is not growing, right? If you're not growing, you're going backwards. Okay, less. Okay, 89, 84, down again. 9.1, 9, down again. 10, 9.9, down again. 9.0, down again. Hold on. Trust me, it gets worse. We're not even halfway through yet. 9.0, okay. 9.9, 10, 8. 8.1. It goes from 10 to 8. Now, I don't know about you, but 10 to 8 is a 20% drop. Not an increase, a drop. So when I say make sure the company is profitable, apparently that's not that important to you. Now, I don't mean to insult you or anything, but did you even look at the numbers? When it goes from 10 to 9.9, and then to 9, to 10, to 8, 13 to 10, that's backwards again, but it's no. Okay? 11, 11.4, 11.5, back to 8 again. 13, 12, okay, 18, 20, 16, 18, 19, 20, 17. There's no consistency here whatsoever. Well, there is. It goes up, it goes down, it goes up, it goes down. It doesn't consistently increase. So if it doesn't consistently increase, well, basically they're not consistently profitable. So, no. No. Where else are you streaming? I'll switch. You're better off going to TikTok because TikTok, the camera does reverse and you can read everything normally on TikTok. All right, so I'm missing some questions here. Holy cow. Happy New Year's, Kilroy. Hey, can we check out? Yeah, we're gonna check out Labu, Labu. Uh-oh. I don't know where. I don't see it. Wow, so many people here. Haha. All right, Kilroy. We're gonna check that out in a little bit. What do we have here? Bought some SMCI. Holy cow! Well, let's do the exact same thing. RL. Watch. We're gonna put SMCI. And no, SMCI is not profitable either. So let's wait for it to load. There it is right there. Super Microcomputer SMCI. Look at that. There are no dividends at all. So I'm kind of curious. You know, we got a lot of people here. One of you, please explain why you would offer a non-dividend stock on a dividend stock show. A little mind-boggling, but we're going to say no to SCNI because it has no dividends. APGO, huh, Cindy? Let's take a gander at APGO. APGO. Uh-oh. Okay, I wrote it down. APGO. APGO has no options. Okay, Cindy, rule number 4, weekly options only. Kilroy, let's take a look at LABU. What is that? LABU. Direction shares. What is that? Oh, the S&P Biotech Bull. Okay. All righty. Here's the top at 180. Here's the bottom at 30. Is that right? The bottom is 30 and the top is 180? All right, hold on. Okay, that's 100%. That's 200%, 300%, 400%, 500% increase from the bottom. Right there, the bottom in April. $30 jumped up to 180. That's a 500% increase. Who saw that coming? Okay, but look at what she's doing. She's pulling back now. You got to run like that. Of course, there's going to be profit taken. Look at it. Shoots up, pulls back. So I would wait. Okay, just wait. Kilroy, wait for that to turn around. Let me zoom into that a little closer. Okay, that's a little less than 30 days. Up, down, up, down. It looks as if today could be the turning point. Turn around, going back up again. Uh-oh. All right, what else are we looking for? So that's what we got on that one, Lebu. James, hey, 86, what's happening? I got nothing else to do tonight. I'm retired. What else you want me to do? Hey, Alex, thank you. Papa G. Anyway, Alex, it's G-E-I. Okay, let me see if I can write that one down. Papa G. If you can see that. All right, let's keep on going. Thanks, Alex. Enrique, what's happening? Rugged Standards. JM, Jesus. All right, Doug, Randy, HL, Ernst, how you going? Dex, Yoanki, okay. Hey, Dina, how's it going? Dina wants to take a look at Dell. Do 5 or 10 years. I hope not. Okay, he wants to take a look at Dell, D-E-L-L. Here we go, 170 is the top. Was that 68's the bottom? Here we are at 110 a year ago. We're at 125 now. Look at the motion. Down, up, down, up, down. Okay, it's going down now. I do like Dell. I love Dell. It's on my list. But not for this week. Okay, I want to wait for it to... Let's clean that up. Okay. As she's coming down now, I want to wait a week or so. Okay? So... down, up, down, up. Now she's coming down still. She's at 125. I want to give it another week. It should come down to about there. It should. I mean, that's the way it looks. It may not. We don't know. But either way, I'm still writing it down for 2 weeks from today. Because it just might. And with over 10,700 different companies to choose from, Well, if I put it on my radar, I'm more apt to look at it than some of those other ones. And I don't care how good you are. You can't give a good look to 10,000 different stocks every day. All right, so Dell, I'm going to write that down for a couple of weeks from today. Let's look at it next week. No. Yeah, next week, Dell. All right, it's on the list for us to take a look at next week. All right. Okay, let's keep on going. Took your advice and bought Amazon call options, down 40%, 46%. As often, my wife to be asks questions. Okay, well, you can ask her why you're blaming me for something that you did. Amazon is not on my list, and you can check every single one of my posts and see that I don't buy options. I sell them. So wherever you got that information, sure it wasn't from me. Okay, so let's keep on going. Same set of mind. Okay, Franklin. Thank you there, 86. Terry wants to take a look at SoFi, S-O-F-I. Okay, before I go take a look at SoFi, besides the fact that SoFi is coming down, okay, there's the top, now it's coming down. Besides that, let's go over to Yahoo Finance and see why I don't do SoFi. All right, come on. There it is. S-O-F-I. Bullshit. There it is right there. Okay, so SoFi Technologies. SoFi. Okay. $26.18. So am I misrepresenting what I'm looking for? There are no dividends on SoFi. So why would I do that? But let's take a look at it anyway, just for the fun of it. Okay, so here's SoFi. Well, it's going to be a no anyway. Okay, here's your last 30 days. So now, the last 30 days gives me a good idea of where do I think it's going next. And considering I'm only doing a weekly option, which is only 5 days in a weekly option, well, trying to figure out where that's going, that should be a no-brainer. I mean, take a look. The top is here, bottom's here. You know, I think, do you remember? Follow the bouncing ball, bouncy, 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 fun, 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 fun. There you go, up, down, up, down. It's going down still. Here's the bottom here. So if she's going down, a little recovery, she should be still going down. Now, this is the reason why we look every day. If you really like SoFi, okay, if you really like it, you should be watching this. And as soon as that makes the turn and going around, that's a perfect time to buy, in my humble opinion. We all know what opinions are, okay? All right, winner 86. Give, is that a stock, or are you just giving up on? I'm at a loss. Okay, there is no stock for Give, but hey, it is what it is. Up, down, Bernatello. I have no idea what that means. Holy cow, I just clicked on that. Holy shit, you look like you're in your late 20s, early 30s. Okay. Riley, good evening, sir. Visiting family, catch you next week. Yeah, buddy. All right. Mikey G, Happy New Year, Mikey G. DM me. I want to know how you did this year, because you've been following me for quite a while, and I'm curious how you did. Now, I do know, I'm going to call you out, that I do know once in a while you don't listen to what I say and you go contrary, but I'm still kind of curious how you did. Most important, yo, I love Chris. That's not what it says. Okay. Yo, I love see this. Okay. Minastico, what kind of chart are you using to track dividends? Did you just ask me that? What kind of chart am I using to track dividends? Hold on. Let's put in a good one. MSFT. What kind of chart am I using to track dividends? What? The page can't be found. No, say it isn't so. Okay, MSFT. Let's try that one. All right. Minostico. Is that right? Minostico? Is that right? All right, anyway, here we go. MSFT, Microsoft. So let's check out 20 years. Uh-oh, why is it not moving? If I hit it harder, it doesn't work any better. Most important, what is profitable? That's an interesting question. Let me see if I can understand this. What is profitable? I would say profitable is ending with more than you started with. That's what I think profitable is. I don't know if that's the definition you're looking for. So what do we have now? NVIDIA, holy cow. Anime Leo, what is the concept, name, dividend stock talk all about? You mean investing for weekly cash flow? What is that all about? Well, investing for weekly cash flow is investing to get money on a weekly basis. I think that's what it is. And flow, okay, we're still waiting for this thing to load, having issues with Yahoo Finance tonight. Okay, so let's keep on going. The game I'm talking about, yep. Covered calls, anime, there we go. Exit page, do something. Okay, Phil Collins, you're losing your, okay, fine. Okay, number one, you and I have never talked, okay? So you're coming here saying you're losing, well, why don't you just give me a call? Drop your number, I will give you a call. Now, I've been doing this for 30 years. I might have something to contribute, okay? Now, I'm not gonna charge you either. Just drop me your number, I'll give you a call, and hey, we'll chat, and you tell me what you're doing, what obstacles you're facing. It's not gonna cost you anything but your time. Just say, hey, I'm losing my ass on this. What do you think? What's wrong with that? I am still stuck in Hormel, Campbell's, and OXLY. Okay, but are you making money off of it? Do you think that trading is, or investing is, buy, sell, buy, sell, buy, sell, buy, sell? No, it's not. It's looking where to put your money that best suits your desired outcomes. Now, my desired outcomes is a simple, safe, predictable 1% per week. So what I do works for me. So I don't know what you do, so I have no idea what your goal is. So when you say you're stuck, are you bringing in any money, or what are you doing? Are you just sitting on the lines waiting for it to come back up with no offensive moves? There's always a way to make some money off of whatever position you're in, no matter where it's at. It's all going to come down to perspective, and what your goals are and what your risk factors are. Is this thing loaded yet? There it is, right there. Okay, why were we looking at Microsoft? I forget. What is profitable? Okay, most important, let's take a look. All right, we're loading up Microsoft. Now, you guys all know Microsoft has been around for more than 20 years. So let's take a look at what a profitable company, in my humble opinion, is. Now remember, this is just my humble opinion. You can call me wrong if you want, but take a look at the numbers, because numbers don't lie. Okay, 2005 would be 20 years ago. Remember, I'm looking for 2 decades of increased profits. 2 decades. Well, this is 2025, so I don't go all the way back to 2025, to 2005. That's 20 years. So let's take a look. So 2005, 8 cents per share. Big deal. But 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83, 91. Did you notice each and every year that number went higher and higher and higher year after year after year. And trust me, there's over 300 companies that do the exact same thing. So why would you invest your money in a company that's not making more money year over year over year? Now, I understand things can go wrong in the economy. You can give me excuses all you want. You can say, but it has good this, it has good that. I really don't care. Honestly, I don't. I'm a Gen Xer. We really care about almost anything, because we just don't care. I want to see the actual factual numbers. So the dividends that they pay year after year after year, if it is increasing year after year after year, you can take a look at the books, because the only way to increase the dividends is to increase the profits. That's it. You cannot increase the dividends without increasing the profits. It's in the math. So, right to the dividends, if it's increasing consistently, yeah, that's where I want to put my money. Now, don't get me wrong, SMCI may work for you. Okay, SCHD may work for you. ARWR, is that American Water? That's a monthly. Okay, rule 4, I don't do monthlies because it's very challenging. It's going to take me more time and effort, weird as it may sound, to manage a monthly than it does to do a weekly. Because a weekly gives me money every 7 days. A monthly, I got to figure out where is it going to be in 30 days. So it's not as easy to try to plan where it's going to be in 30 days. It's much easier to figure out where it's going to be in 5 days. Because in 5 days, I can change my order and go in a different direction. And trust me, I've been doing it long enough, the numbers just don't work for me. Now, one day, I'm assuming that's your number. I will give you a buzz. But don't put your number on the screen for everyone to see it. This is going to be fun. I want to try something. I've never done this before, so let's see if this works. So don't go anywhere. Let's try this. Okay.
The service you're attempting to use has been restricted or is unavailable. Please contact customer care for assistance. Message TP403FL6.
Well, in that case, why don't you give me a number that works? I just tried calling just now. I thought it would be kind of fun to call live, and apparently that number is not working. Okay, you all heard it, like the number you're about to dial. QYLD paid double monthly dividends in December. No, it's not double monthly dividends. It's called a special dividend. That means when they have more money than they thought they were going to have, they had to figure out what to do with it. So, give it to the investors. Okay, so let's take a look at QYLD. I'm going to say no to that one also. Okay, QYLD. Now, every once in a while, you'll get a company that will give a special dividend. And usually that happens when the company makes more money than they were supposed to. Now, don't get me wrong, but I remember in January when you get the Democrats saying, oh, the economy's going to tank, everything's terrible. But yet, you got a company here giving out more money because they made more than they were supposed to. I find it strange. Okay, so here we are right here. Take a look at this. Global NASDAQ 100 covered call ETF QYLD. Okay, fine. Now, let's go back as far as we can possibly go. 19, 18, 17, 16, 15, 14. All right, 2014. So it's only 11 years old. Okay, I'll cut you some slack, 11 years. Let's see how consistently profitable are they. Let's find out. The first one, 25.7. 25.7, very first one. 19. Okay, you're off to a bad start already. If the first dividend is going to be 25.7, and then the next dividend is 19.3, that's not a good start right from the beginning. I don't care if they gave a double dividend or not. Okay, the first one, 25, second one, down 6. 6 on a 25 is almost 20%. It's almost a 20% drop. Okay, 19, 26, 24, that's down. 21, that's down. 20, that's down. Did this thing just go down 4 times? It went up once and went down 4 times. Explain to me why that's good. Anyone? Anybody want to explain to me why you think going down 4 in a row is good? Hold on. Let's see if it gets worse. Okay, 20, again, from 20 goes up to 22. And then it drops to 19, jumps to 24, drops to 14. Are you shitting me? That's almost a 50%. No, okay. Okay, down, up, down, up, down, up, down, up, up, down. Do you see the pattern here? Not consistently profitable at all. So why would you want me to put my money into something that's not consistently profitable? Okay, you may like QYLD. I don't. The numbers don't support what I'm looking for. Now, you might be looking for something different than I'm looking for, but it's not what I want. Oh, look at this. Down to 10 cents. That's horrible. 10 cents. 22, 15. That's more than a 25% drop. No, it doesn't make me happy at all. So no, I don't like QYLD. And I don't care that it gave double dividends. Well, because they probably should have. Because it goes up, down, 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 up, down, down. No. Nope. What else we have? Let's see. You can't beat the S&P 500. Oh, yes, I can. Think about it. Let's take a look at the S&P 500. The SPX, that mirrors the S&P 500, right? So let's take a look. SPX. Wait a minute. What is the S&P 500? No dividends. No, that's not what I wanted. The S&P, damn it. What's the ticker for the S&P 500 for the stock? When it follows the stock. Grayson, what's happening? Khalid, one day, am I losing in money? I have no idea. See, a picture is worth 1,000 words. You tell me you're losing money. Well, what? What are you doing? Okay? So there are so many different trading strategies out there. Whatever you decide to do, well, you're going to make money, you're going to lose money. Stocks do 2 things and only 2 things. They go up and they go down. Hold on, we still looking at QYLD? No, we want to look for SPX. What is SPY? That's what I want to look at, SPY. SPY. I knew it would come to me. This getting old stuff's no fun. Okay, so, Spider, the S&P 500 ETF. Okay, so who said... La 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 la. Kelly lost over $200,000 in options last year. Kelly, this is the first time I've seen you here. Okay, so I'm kind of curious. What were you doing? Were you buying? Were you selling? What were you buying and what were you selling? What strategy were you using? Because I can almost guarantee 100% you weren't using the strategy that I use. Because if you lost 200 grand last week alone, I don't know what to tell you. Okay? Because like I said, a picture's worth 1,000 words. If I could see what it is you did, I could show you, in my opinion, where I think you went wrong. But I don't know if you and I are looking for the same thing. Okay, I'm only looking for 1% a week. Now, if 200 grand is 1%, that's a nice fat chunk of change you got there. Yep, we're going to look at the SPY right now. ULTY, oh, hell no. Okay, so I don't know who it was who said they liked the spider, but let's take a look at the S&P 500 ETF. What the hell just happened? Everything just turned off. Oh, imagine that. What the heck was that? Well, let's find that out again. That was weird. Everything went blank. Mackenzie, how you doing? The Sleigh Dad. K-Van. Hey, Florida Hockey, how you doing? All right, so we're going to look at SPY, which is the S&P 500 ETF. And we're going to find out why someone thinks I can't beat the SPY. I don't know why you'd say that. You know nothing at all about me. You have no idea, but wait, it gets worse. You have no idea what I have done over the last few years. And here's the thing. This year and last year, I share every single one of my trades. So if you were a betting man, I would bet you that I did beat the S&P this year and last year. But you don't know me, I don't know you, so it's probably not a good idea. Okay, let's wait for it to reload while we take a look at that. So what else do we got? Swoop wants to take a look at XYLD. What are all these ETFs? What is it with these things? XYLD. Oh, another S&P 500 ETF. Now it's a monthly. Okay, Swoop, I don't do monthlies. Okay, monthlies are very challenging because you got to try to figure out where it's going to be in 30 days. It's hard enough to figure out where it's going to be in 5 days or tomorrow or the next day. But 30 days? Yeah, I don't do monthlies. Yeah, Alex, 86 says, but wait. Watch videos on selling covered calls. They're everywhere. What some stocks you like? Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and anything on Warren Buffett's list. That's the stocks that I like. That's only about 300. Okay, we check every single week. And this week, there's 10,780, I think. There's a lot. But I only look at 300 because only 300 of them fit what I'm looking for. Okay, so is this up yet? Okay. Now, I want to go to historical data, and I want to put in SPY. If you'll put SPY first, and then we will look at QYLD. Now, QYLD is a relatively new company, so that's not really going to do us any good whatsoever. All righty. SPY. Historical performance for SPY to show you, does it consistently go up? Is it consistently profitable? No, it's not. That's why I don't buy it. Okay. All right, so historical prices. Remember, I just want to look at the dividends because if the dividends increase, that means that keeps increasing. So dividends only. Okay, now I want to look at 20 years worth of data, so I'm going to take a look at maximum, and let's take a look. Let's go all the way back to 2005, and then we're going to look at XYLD. Okay, so 2005, there it is right here, 2005, March 18th. Okay, so let's look at some of the numbers for the S&P. SPY. March 18, 2025, 46.7. 48, that's higher. 52, that's higher. 67, that's higher. 51, that's lower. I thought S&P, you can't beat it. But why did they go from 67 to 51? No answer? Okay. 55, 57, okay. Higher, higher. 79, higher. 55, lower. That's twice in 2 years. Okay. 79, 55, that's down. 65, higher. 71, higher. 77, higher. 64, lower. So what is that? 3 up, 1 down. 3 up, 1 down. 3 up, 1 down. 4 up, 1 down. Okay, 77, 64 down, 66 higher, 69 higher, 71 higher, 56 lower. 51 higher, 50 lower, 49 higher, 48 lower, 53 higher, 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 lower, higher, lower, higher, lower. Not consistently profitable at all. But it does have 20 years of dividends. But do you really have, honestly, ask yourself this question. Do you really have $681 per share to invest in SPY? I mean, I do, but I'm not going to. It's almost $700 a share. That's tying up a lot of capital. And guess what? 1% of 700 is still 1%. I can get a $10 stock and get 1%. Because see, numbers don't lie. 1% of $700 is still the same as 1% of $10. 1% is 1%. Okay, when you're investing for weekly cash flow, it doesn't matter the stock price or the ETF price. What matters is the rate of return. And I'm only looking for a 1% rate of return every week. So SPY, no. Up, 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 down. Up, 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 down. Yeah, no thank you. I want companies that are only go higher and higher. Okay, so XYLD. Is that going to be the exact same? XYLD. All right, give it a second. It'll load. Okay, here it comes. Okay. Global S&P 500 covered call ETF XYLD. Okay. So let's go back. How far back did we go? 23, 22, 21, 20, 19, 18, 17, 16, 15, 14, 13. Oh, almost. Got down to 2013. So what is it, 12 years old? Not quite there, but let's take a look at the numbers. Okay, 3.9, 15. Now that's a nice jump. From 3.9 to 15, that's a nice jump. But look at the next one. 5. So it goes from 3.9 to 15 to 5 to 3 to 6 to 75 to 1.9 to 13 to 4.6, 3.3, 8. So that's not bad. 8. Then it was from 8 to 5.2, 3.6, 20, 17, 25, 18, 16. There's no consistency there whatsoever. It's kind of like a crapshoot. It's like, let's throw my money in there and see what happens. Okay? Hey, Dr. Dev, sorry you're late. Hey, I'm getting ready to leave in a little bit. It is New Year's Eve, and you know what? I enjoy this. I really do. Okay? But no. See, XYLD and SPY, they cover the same stocks, the same entity, so it's just as bad. So it's always going to depend on what is it that you want out of this. Okay, do you want consistency of cash flow? Now, I know 1% is not a lot, but 1% every week is over 50% per year. And it's only an extra 10 minutes a day. It doesn't take long to open up your account and say, oh, all right, I got 8 positions. Okay, number 1, what did I buy it for? When did I buy it? Okay, what did I sell against it? How much did I get? Where is it at now? Where does it look like it's going? What should I do next? Those things can be all done by looking at one picture. And that picture will look something like this. Let me see if I can do this. Something like this. Okay, and come on. There we go. Advanced Auto Parts. Okay. Now, it looks a little confusing, but it's not. Once you take a look, it's like, do you remember driving a car first? It's like, where's the gas gauge? Oh, okay, there it is. Where's the blinker? Okay, there it is. The odometer? What the hell's an odometer? Oh, that's what, okay, fine. Okay, yep, oh, that's where it is. The first time you got behind a car, everything was confusing. Same thing when you take responsibility for your own money and be an adult and do it on a big boy or big girl trading platform. Okay? So, All right, so Advanced Auto Parts, we all know who they are. Okay, so $40.99, and I sold this one here. Which one did I sell? There it is, but which one is it? Okay, that's what it is. Okay, hold on a second. Okay. First thing I want to do, always, and it takes not even 2, 3, or 4 seconds. That's it. Once I open it up, I get it set up the way that I want it, okay? First thing I'm looking at, the high, the low, where was it, where is it, what's the motion? That's it. That takes less than 2 or 3 seconds. One look. High, low, was, is, direction. That's it. 2 or 3 seconds. Next, what I want to look at is what did I buy it for? Right there. $40.99. Right. Okay, what did I sell? Right there. January 9, 26, which is next Friday, the $41 call option. I bought it at $40.99 and I'm selling it at $41. I'm only making 1 penny off of that stock, but that's not what I'm looking for. What I'm looking for is this, the premium. The premium I collected on this was $1.59 per share. So 100 shares, that's $159 per contract. Think about that. Regardless of what the stock price is, I own 1 contract. And that 1 contract will give me a return every single week, regardless of what the stock price is. Because if the stock price is at 70, I still have 1 contract. I can sell 1 contract. Okay? If the price drops down to 30, guess what? I still have 1 contract. And that 1 contract will allow me some cash flow. Now, do you remember rule 2? Never sell at a loss. It just doesn't make any sense. Why would I buy something at $40.99 and sell it for less? That doesn't make sense. That doesn't compute. Terribly sorry. I want to sell it for almost the exact same price I paid for it or a little higher. So I paid $40.99 and I want to get 41. Okay? The 41 right there. And I got $1.59. Now you're probably thinking that's not a lot of money. Wait a second. Let's get out the calculator and figure out what the rate of return for 1 week, 1.5 weeks. Right? Because I bought it just the other day, and it's for next Friday. Not this Friday, next Friday, which is a week and a half. So I don't want 1%, I want 1.5 minimum. Because it's a week and a half. I want 1% a week. Okay, so let's get the calculator and find out exactly what rate of return that is. So you can say, oh, that makes sense, or no, that don't make sense. Okay, to find out rate of return, you take the profit, $1.59. $1.59 little guys. And then we divide it by the purchase price, which was $40.99. It's right there, $40.99. Okay, divide 40. 99, it gives you a grand total of, you ready for this? 3.8%. Not 1%, not 2%, 3.8. Okay, I can live with that. Okay? So, anyway, I'm looking for 1% every week. This 1 trade gave me 3.8. Fine. Do I like Advanced Auto Parts? Yeah. I would not have bought it if I didn't like it. Does it make sense? It does to me. That's why I bought it. Okay? All right, anyway. Doesn't take long. First thing I want to see, the 1-year chart. High, low, was, is, motion. That takes less than 3 to 4 seconds. Then, what did I buy it for? What did I sell against it? What did I collect? Where does it look like it's going now? Well, let's zoom into that and take a look. Okay, after I get to that point, if I really feel like it or I feel the need to, because I don't have to all the time, I want to take a look at the 90-day chart, which is the last 3 months. And it only takes a couple of seconds to look at this one also. The top, the bottom, what is it doing? It's dropping. Anyone can see that. Okay? Drop, hit a bottom, turn around. Drop, hit a bottom, turn around. Drop, hit a bottom. Not yet. It's still messing around down here, but as soon as it turns around, goes up, well, I might dollar cost average, which means add to my position, or if I've made enough premiums off of this, which means 1% every week, and it hits my target, which is 42. Remember, I bought it for 40.99. 40. Okay, sorry. My target is 41. Sorry. So I'm not looking for capital appreciation. I don't even care if the stock goes up. Seriously, I don't care if the stock ever goes up. My concern is the option that I am selling. Uh-oh, let me get out of this. Okay, as I was saying, the option that I am selling, remember, if I got one contract or 100 contracts, it doesn't matter. As long as I have a contract, I have something to sell. So, at the money, here it is, between 39 and 40. That's at the money right now. You can tell by that line right there. Okay? These are calls, these are puts. I don't do puts. They're confusing. Trying to explain puts to a 9-year-old was almost impossible, so I didn't even try. I wanted it simple, I wanted it safe, I wanted it predictable, and I wanted it something that she could do in less than 10 minutes. So, I want to buy it at the current price, sell whatever strike price is closest, and collect this, the premium. It just sounds lovely, doesn't it? Premium. Oh, that's premium. Yeah, I want to collect the premium every single week, and I want that premium to be more than 1%. If the stock price is $39.65, well, I want to do the 40s, and the 1% of $40. You'll love this. You ready? 1% of $40 is 40 cents. Okay, $40, 1% is 40 cents. And that's per share. So if I have one contract, that's 100 shares. If I have 10 contracts, that's 1,000 shares. So whatever the premium is, you multiply that times 100 times however many contracts you have. Because one contract is 100 shares. So when it says 103 for the 39, that 103 is actually $103 per contract, or $1.03 per share. Okay, so it depends on whatever level you're at. If you're a beginner, maybe you have a couple of thousand. Okay, if you're midway, let's say you're 30s or 40s, maybe you have, between 25 and 75,000. But if you're in your 50s and 60s, you better have at least 6 figures. If you want to retire, you're going to need 6 figures, in my humble opinion. But it's always going to depend on what type of living you want to do. Anyway, let's take a few more questions, then I want to call it a day. I want to kick back and relax and do a lot of nothing for the next couple hours, maybe sleep through the whole thing. Who knows? All right. All right. SSP Group. Luke, what the heck is SSP Group? SSP. Hell no. Dropping by to say hi. Hey, Charlie. Oh, Phil Collins bought some. I'm going to read this one out loud because this one's good. I bought some Amazon a month ago like a dumbass. I didn't say that. I'm just reading what he wrote. All right, what else we have? Not on motion on Dell. Okay. Phil, are you selling weekly calls on those? Too small. SoFi, sincerely. Okay. I was, but not anymore. I guess I'm just waiting on the dividends. I'm doing good with Chimors. Okay. For 3 weeks now. What about NVIDIA? Oh my God. There's always one in the crowd. always, someone in the crowd yells out NVDA. Boy, I love this is my favorite part because I love the uneducated people. I'm here to educate people. I'm not asking for anything in return. I'm not asking for any money. We're all adults and how it works. I've written books. I got the shows. I got seminars coming up. I got a lot of things going on this year, but I'm not trying to sell you anything. Okay, you're an adult. You know how it works. Let's do this. You ready? So, NVIDIA. Yay! Everybody's crazy about NVIDIA. Not me. $186 per share. 186. Who gave me this one? Jeff. Okay, Jeff. NVIDIA, $186.50 is paying 1 penny. A 1 penny dividend. You're spending $186 to collect 1 penny. Hold on. This sucker gets a whole hell of a lot worse. Let's go and take a look at statistics right here. Okay? Just above historical performance, let's take a look at statistics and then you tell me what you think of NVIDIA. Because I'm not one of those people that jumps on the bandwagon. NVIDIA, yeah. Ugh. Anyway. Alrighty. Look at this. They went up a little bit. So, NVIDIA, are you ready? Now, if you don't understand what a statistic is, it's just a bunch of numbers comparing to a bunch of other numbers. Okay? As I read them out, you'll be able to understand. Okay? So understand this. All right. Revenue. That's money coming in. Revenue per share. Okay? $186 per share. Look what the revenue is. $7.67 per share. That's the revenue coming in from each share. That's paying you a 1 penny dividend. 1 penny dividend. Revenue per share. $7. Yay! Okay, hold on. It gets worse. Earnings per share, $4.05. $4.05 earning per share. Book value, $4.89. Do you understand what book value is? Book value is the actual value of the company per share. That's it. It's worth $4.89. So, my friends, you are paying $186.50 for a company that is worth $4.89 per share, that has a revenue of $7 per share. Now, you may think that's good. You might. Let me show you a company that's over 100 years old, costs a hell of a lot less, and has a dividend a hell of a lot higher. And you know it a lot better than you know NVIDIA. And it's over 100 years old. Okay, General Motors. You may like it, you may not like it, but you can't argue with the numbers. You can't. Na boo boo, whatever. Okay, so General Motors, $81. $81.32. Okay, well, let's check out the revenue. Well, the revenue on an $81 stock is $189 per share. Do you see a disconnect there? The company stock is $81, but the revenue is $187 per share. It gets better, watch. Earnings per share, $5.24. Book value, $71.14. Now, this was awesome, okay, a couple of months ago when the stock was in the 40s and 50s. But now the stock's in the 80s. But still, it has a book value of $71 a share. And the dividend is a hell of a lot higher, okay? Forward dividend rate, 0.73. No, that's not right. That's not right. 5-year dividend, okay, payout ratio, blah, blah, blah. Anyway, all the numbers are there. I'm just trying to come to a point. People are yelling and saying, NVIDIA. No, the numbers are absolutely horrible. You're counting on hype to get you from point A to point B. Hey, have fun at it. You do what you want. Okay, I don't do NVIDIA because the numbers are absolutely horrible, in my humble opinion, as a long-term investor. But I'm not a long-term investor. All right. We haven't looked at very much tonight, have we? All right. What are some stocks that I like? Okay. Crazy Seeker. Dividend Kings. Dividend Aristocrats. Dividend Champions. Dividend Contenders. And anything on Warren Buffett's list. Those 5 lists right there will give you over 300 companies to look at. Reg Bruner, SPY, we're looking at that. Tim, VOO, you're going to see the exact same thing we saw 5 minutes ago. Cheese, FX, what is that? FXAI, is that right? Is that what I read? JEPQ, oh hell no. Okay, Cheese, I've never heard of that. Let's take a look. FXAIX. Is that right? FXAIX. Okay. Hell no. What the hell are you thinking? Okay. Marketing Life with Tina. Do you have to have $1 million in dividend stocks to make a living on dividends? Nope. You'd be surprised, Miss Tina. Ask yourself a question. How much money? Now, this is going to be a challenge, and it's not sexist whatsoever because Tina, I'm assuming, is a female. It's not sexist at all. But depending on what you need to live comfortably is a huge difference between what you want to live comfortably. You may want, oh, wait a second. Caviar dreams, champagne dreams and caviar, whatever it is. Champagne and caviar dreams. I forget, what was it? Robin Leach used to say that. Champagne wishes and caviar dreams. Yeah, if that's what you got, but you only have a bare budget, you got to be realistic. Needs are a hell of a lot different than wants. Okay? So ask yourself the question, Tina. How much do you need on a monthly basis? Your mortgage, your rent, your insurance, your entertainment, your food, your electric, your cable, all that kind of crap. All of it. Throw it together. What do you need on a monthly basis? You need $3,000? Well, to get $3,000, you're going to need at least $150,000 to get 1% a week. 1% a week on 150,000 is 1,500. 1,500 times 4 is 6,000. Think about it. Okay, $100,000, 1% a week is $4,000 a month. Do the math in your head. How much do you need to live comfortably? Now, $1 million will give you about $10,000 a week. $10,000 a week is $40,000 a month. Do you really need $40,000 a month to live comfortably? I don't know. That's a number, and it's different for all of us. Okay, you guys have a number in your head what you need. Now, me, I'm a Gen Xer. I can live with, $500 a week and be perfectly happy. I got no problems whatsoever living out in the woods, living off land, stuff like that. But that's me. I'm different. Okay, not that that's what I have. I know I don't live. No. Okay, you got to figure out what you need and then decide what that number is. Because anything over a necessity is a luxury. Okay? Now, you may not believe this, but at $34,000 a year, you are already richer than 50% of the people on the planet. And I know most Americans make more than $34,000 a year. So you're richer than 50% of the planet just on $34,000 a year. So imagine how much you're making. Okay? And then take a good look at where are you spending your money. Now, you may not think it, but even $2 to $5 a week consistently every single week can change your financial life in 5 or 10, 15 years. And don't kid yourself. It's coming whether you like it or not. Okay? I'm 61. I had no idea what a 61 or 62-year-old's supposed to do. I got no clue. I've never been 62 before. But in 3 weeks, I will be. Okay? So what is a 62-year-old supposed to do? Am I still supposed to be working? I mean, I don't need to. I've been working since 1974. Okay? That's quite a long time. I think I deserve to be. Hey, I'm done. Let the young crowd come in. The Gen Zs, the Gen what the hell, whoever the hell they are. Let them come in and take over. APLD pays good covered calls. Cash secured puts. Fuga, let's take a look at it. APLD. Come on down. You're the next contestant on Let's Make You Squeal. APLD. Here's the high. Here's the low. Here's where it was. Here we go. Okay. Sideways, up, down, up, down. What's going on right there? Well, let's take a look. Okay. Let's take a look at what that looks like. Okay, so the last 90 days, the last 3 months. Okay, top, bottom, there we are, here we are. Look at this, down, up, down, up, down. What's going on right there? That is what I'm interested in. Because this back here, that was a month ago. I don't want to look at that. I want to look at the last 30 days. I want a good idea of where this baby's going in the next week or so. Well, here it is, last 30 days. Up, down, changing direction right there. Okay, here's the bottom. She shot up, pulled back. Now she looks like she's going back up again. If you like APLD. So let's take a look at it. We haven't found anything tonight yet. Not a single one. Got me talking. Don't get me talking. Keep me on track. All right, so let's take a look. All right, the current price, $24.52. What's the closest strike price? $24.52. Come on, you know it. It's $24.50. Look at that number. That number's freaking crazy. I'm writing this one down. Hold on. I'm buying that one on Friday. These numbers look good. Okay, so let's take a look at the $24.50. Okay, first one, change it to covered calls. I love Thinkorswim because everything on the same page. So $24.50, there it is right there. And let's do 1 to see what, because 1 is the loneliest number that you ever do. 2 can be, okay, here we go. Buy 1, covered call, APLD. 9 January, that's next Friday. Okay, so I'm going to buy the stock first thing tomorrow morning. Friday morning, because there's no stock market open tomorrow. Friday morning. I'm going to sell this option right here. Okay, 9 January, the $24.50. Look what I'm buying it for. $24.52. And I'm selling it for $24.50. Okay, I'm going to walk away with $183 per contract. Let's bust out that calculator and see what it's costing me, or see how much I'm going to make off of this. Okay, so my max profit, $183.50. For 1 contract. Now you got to figure out, can you do 1? Can you do 10? Can you do 3? Can you do 7? How many can you do? Okay, profit $183.50. 183 and 50 little guys. Then I'm going to 0.5. Okay, always got to check. And I'm going to divide that by the cost of the trade, including commissions and fees, $2,267. Let's see what the rate of return is. Holy cow. Okay, so I'm going to divide it by 2267, and that gives me a grand total of 2267. 8% for 1 week. If and only if you like APLD. Okay? APLD. Okay? That's 8% for 1 week. And what does the stock have to do? Nothing. Hold on a second. I got to fix this over here. Every once in a while, you have to manually touch the screen so that they know you're a real person. So think about it. The stock is currently $24.52, and I'm going to sell it $24.50 and make an 8% trade for 1 week. But hold on a second. It actually gets much better. Watch this. Now, that is all cash. If I had an all cash account. Now, this is what I suggest to new people all the time. Never, ever, ever do margin until you understand the risks involved. You're borrowing someone else's money to trade with. That is a dangerous combination. Now, I do it because I've been trading for over 30 years, but I suggest you do not do it until you understand it. But let's check out what I'm going to get if I do this, okay? Because I do have a margin account, okay? This number here, cost of trade including commissions and fees, $22.67 if it was all cash. But this is a margin account. So look what I have to put up. $1,532. That's almost half. So let's see what my rate of return is going to be. The profit's going to be the same. Okay, whether you're cash or whether you're margin, the profit per contract is still going to be the same. Okay, 183 per contract. But how much money do I have to put up? I have to put up, hold on, the profit, 183.50. Okay, so in a margin account, I only have to put up 1,532. So let's divide that out. 1,532 and 15 cents. Okay, let's be exact. Why not? That's 11.9%. Think about it. Seriously, think about this for a second. Let's get rid of this. Hold on. I want to save this. All right. Give me 1 second. I'm going to save it. Come on. There we go. There it is. And there it is right there. APLD. Hold 1 second. One covered call, APLD, 9 January. The 24.50 call option, which means I'm going to buy it for 24, whatever it was, 24.52, and I'm going to sell it for 24.50. And I'm going to collect 183 per contract, costing me $2,700 all cash, but $1,500 in margin. Okay, so I have a margin account, so I'll be collecting close to 12% for 1 week. And yeah, I am going to do that Friday morning. Why the hell not? Think about it. I like APLD. Anyway, it was, I forget what rate of return that was. Like an 8%. All right, so we're going to save it. $8%. That's crazy. Crazy, I tell you. That's all cash. 8% all cash, 12% if it's on margin. Because the number's right here. This will tell me everything that I need to know about the trade. Do you remember where I said simple, safe, predictable, consistent? Do you remember that part? Simple, safe, predictable, consistent. Well, the simplicity of this is a covered call is one of the easiest trading strategies there is. Second would be safe. Simple, safe. A covered call, which basically, technically, that's what this is. We buy the stock, we sell the option. That's called a covered call. Don't worry, you're covered. Okay, you're covered. Don't worry about it. Covered call. Okay, predictable. Remember I said simple, safe, predictable. Well, predictable. I know exactly what I'm going to make. I know exactly what I'm going to invest before I even hit this button right here to send it to the market maker. And I think I'm gonna. Yeah, let's do it. Send. All right, so that just sent to the market maker. So So tomorrow morning, not tomorrow morning, Friday morning, that should fill. I'll double check it on Friday just to make sure it's still there. But you have to ask that question. Do I like this company? Does this make sense to me? And then let's take a look at that chart again. Okay, this is the last 30 days. Okay, we were here, we shoot up, there's a 30-day top, we drop, okay, she shoots up, they call this profit taking. Well, I call it profit taking. You can call it retracement, you can call it a pullback, you can call it whatever you want. I call it profit taking because think about it. It was at 27, it jumps up to 35, that's an $8 per share increase. So from here to here, that's $8. I take the profit. You got enough people taking profits, guess what's happened? Stocks drop, 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 drop. Until it gets to a point where people say, hold on, APLD at that price, that's a deal. And then they start buying again. When they start buying again, what happens? The stock price goes up. It's weird. It's weird. Imagine that. The stock goes up, people take profits. Stock comes down, people looking for a deal. And that's all it does. It goes up, down, up, down, up, down, up, down. That's all they do. You just got to jump in at the right time. That's why I look every morning. Okay, every morning I look for opportunities. But I'm only on for like 5 or 10 minutes because I know what I'm looking for and I know what I'm looking at. So it's actually that easy for me. I got to plug this baby in before she dies. Before she dies. There we go. Okay, so number one, does it make sense? Number two, do you like this company? Number three, do you like this company at this current price, $24.52? 4, are you willing to buy it and hold on to it until it hits your target? And this is the funniest part. Think about it. The stock's at $24.52. My target is $24.50, which is less than what I paid for it. Think about it. The stocks go 3 ways. It goes up, it goes down, or it goes nowhere. Sideways, they call it. Okay? So if it goes up, great, I make all my money. If it goes sideways, doesn't move at all, I still make my money. If it comes down a little bit, I still make my money. So either way, I'm good. I'm covered. Now, when I said consistent, well, 2 January, that's this Friday. 9 January, that's next Friday. 16 January, 3 Fridays away. 23 January, 4 Fridays away. 30 January, 5 Fridays away. Every single week, I can take these options, these contracts that I have, and sell them to create cash flow every single week. Let's see what other questions we have. Only a few more, and then I'm going to call it a night. It's 4 minutes of 11. Tin Man, AGNC. M, how are you today? Just covered calls on SPY. Not me. No, thank you. Do you need a 36-year-old son? That's weird, because my son is 36. Isn't that weird? Don't bother with QILD. Yep, I'm not. Trust me, I'm not going to. I need a $10 stock option. There's a whole bunch of them out there. Weekend hooker catfishing. Yeah, we just looked at NVIDIA. Have fun with that one. Costa Nostra. Que pasa? What's happening, brother? Glad you're doing well. I'm glad you're learning. Cool. One of these days, I'm going to feel so unneeded because you're going to learn everything. That's what we're here for. Pinky Boy. Ooh, pre-law flipper. How you doing? Ooh, hello, boy. So we're not looking at it anymore because it's 3 minutes to 11. I'll do my 2 hours. And then that's it. Angie, how are you today? Quentin, how are you doing? Griffin, Tom. Power of Sudan. What the hell does that mean? Power of Sudan. Mikey G. So you want 100% income and no growth at all. Yeah, I'm retired. Okay, but here's the thing. I'm retired and the amount of money I need is a lot less than I bring in. Okay? Go figure that one out, Mikey. The amount of money I need to live comfortably is less than what I bring in every week. So I want 100% income and no growth. That's what I want, but I'm not getting that because I'm getting all my bills paid and my nest egg is consistently growing. Imagine that. Yep. Okay, Acrid Boomstick. Yeah, we'll take a look at that one next time. Mac Beer. So are you writing covered calls? Absolutely. On dividend stocks. Absolutely. Scott McDonald, how are you today? Ooh, Lee, we looked at Nike last night. Okay, we got like 1 minute left. I'm going to be done. Richard, curious why you don't do puts. I mean, a put can become a covered call. You're absolutely 100% correct. Richard, did you hear that? I'm going to say it again. Richard Scannion, you are 100% correct. I just don't do them. Sorry. Okay? Try to explain puts to a 9-year-old. Not that easy. But I understand what you're saying. Because a lot of people do puts first and then do the covered call. There's nothing wrong with that at all. It's a great strategy, as a matter of fact. But I don't want to spend that much time looking at my account. And, Richard, this is huge. Are you ready? I'm not interested in creating more work for myself for more money. I'm past that point of trading my time for money. So I jump in, I do my covered calls, make my 1% for the week, and then, I walk away. I'm good. I could sit in front of my computer longer and make more money, but that's not what I'm looking for. I mean, I got to spend 3 days with my grandson. We had a blast. We had fun. Okay, he was on the show last night and the night before. He's an interesting character. All right, just in time. A Knox. I was born in 75. Wow, 75. I was in Mr. Renault's class. I had a crush on Michelle Catalano. She was like, hold on a second, this is really creepy. You ready? Not creepy in a bad way, but think about this. Michelle Catalano, 2 rows over, 5 seats back from the front. I remember that part. I mean, I remember a lot of weird shit. People say, how do you remember all that stuff? Oh, I got a good memory. Up-down trader, Richard, I personally like selling puts and covered calls onto the same stocks. Yeah, it's nothing wrong with it. It's a great strategy. Terry, what if APLD dropped that week to 22? And think about it. And what? Okay, hold on. You say 22? Fine. Let's go take a look at 22. Okay, this is not something you want to test me on because you're going to lose. Okay, so who is it? Terry, current price for APLD at this moment in time is $24.52. So if I buy it at $24.52, then I sell someone the rights to buy it from me at $24.50, I collect $2.11 per share or $211 per contract. Okay, fine. If she dropped to 22, let's see that. Okay, so 22 would be 1, 2, 3, 4, 5. 5 strikes out of the money. Okay, so if we're now here, okay, that's 5 strikes. So count 5 strikes out. Here's 1, here's 2, 3, 4, 5. So 5 strikes out of the money, which means the stock would have went down. 5 strikes out of the money. Take a look at what APLD is paying. 1, 2, 3, 4, 5. $1.15 per share. But I wouldn't sell that one because that's too close. I always want to go 3 strikes out of the money. So if it drops 5 strikes, then I want to drop down and I want to do 2 strikes after that. Okay, so 5 strikes out of the money. Okay. 1, 2, 3, 4, 5, right there. Okay. So that's 1/15. That's still way, way, way over 1%. So at the money, right there, 5 strikes out, I want to go 3 strikes out. Okay, so 1, 2, 3. Now I'm getting 81 cents a share, a lot less. The further you go out of the money, the less money you get. But here's the thing, okay? I'm still collecting something. And I will continue to collect something, and I will continue to write a covered call every single week until it hits my target of 24.50. I'll hold it for 2, 3, 4, 5, 10 years if it consistently gives me 1 or 2% every single week until it hits a target of 22.50. Because whether you buy the stock at 35 bucks or whether you buy the stock at 22 bucks, guess what? One contract is one contract. And one contract at the money, wherever the money is, this line right there, that's at the money. Okay? You always take a look at, what did I buy it for? Well, at this moment in time, 24.52. What am I selling? That's always your entry point. What did I buy it for? That never changes. Okay? If I buy it at this, that's never going to change. But what will change is where this line is at the money. Right now, it's right here. Next week, it could be right here. Or it could be up here. We don't know. All we know is we have one contract. And that one contract gives me the ability to bring in cash flow every single week. All right, you guys, it's past 11. I'm done. You have a great night. What are you looking for and at? Terry, we're looking at APLD. Okay? That's the stock we're currently looking at. And what I'm looking for, Terry, simple, safe, predictable, consistent, 1% per week. That's over 50% per year. That's what I'm looking for. 1% a week. Painter Professional, 11% behind me. Thank you. Okay, Sweet Den, thank you. Have a good night. Can you do PFE next time? Have an amazing 26. I will. Fuga! Doesn't the 1 in 3% chance drop if the C spot is exercised? No, not at all. Thank you for explaining. You're welcome. Cost and Astra, have a nice day. So Fuga, okay? Cash secured put. The numbers change all the time. To give you an accurate number, and it's very challenging to give you an accurate number because, see, these numbers stopped because the market's closed. But when the market is open, all these numbers change consistently. So tomorrow morning, or I should say Friday morning, all these numbers are going to change. Okay, but the math is not going to change. Okay, what am I buying it for? What am I selling? What am I collecting? What's the percentage? That never changes. The answers change. Okay? All right, so I'm done. What else do we got here? Happy New Year. You're welcome, you're welcome, you're welcome. Thank you there, Mr. Richard Scanyon. K-Van, for your information, April earnings January 7th. Thank you. But you know what, K-Van? I really don't care. With K-Van, APLD. With that interest, with that percentage rate, I really don't care. I'm going to buy it anyway because I like that number. And I like the fact that it's bouncing off the bottom right here. So here's the bottom. Okay, she's definitely going up. She went up a little bit hiccup, but she is going up. 24.50. I don't mind buying it at 24.50. All right, you guys have a great night. And we're going to do this all over again. Maybe tomorrow night. I just might be in the mood to do this all over again tomorrow night. You guys have a great night. And we'll see you again later. Whoops. And we are done for the evening, done for the evening, done for the evening. And now the end is near, and so I face the final curtain. My friends,